Gary Jenkins. He's my next guest, Head of Credit Research at Evolution Securities. Gary, thanks very much for coming in. So we've had some big announcements over the course of the morning so far, just ahead of the market open. I suppose the question is whether or not the markets are going to believe that these are in fact the final figures. That's
going to be the absolute key. If we think back a month or so, what caused the refocus on Ireland as a sovereign was the market just was unsure about exactly how much this bailout was going to cost, and the Irish government couldn't come up with a figure. Well, today they're coming out with all the figures that they need to. Luckily for them, it comes in at just about the right figure so that S&P won't downgrade them again, which is pure coincidence, I'm sure. The key thing is going to be, does the market believe that figure is realistic? Looking at the kind of hits they're taking on property and the write-downs they're making, I would suggest that the figures are realistic, but there's still going to be a long way to go before they're out of the woods.
And of course, 6 billion is the best case scenario. The government is saying that unexpected losses for Anglo-Irish could mean that they could need further cash. Could we expect further write-downs from what we know so far?
I think from looking at what they're doing today, I'd be surprised if there was a need for further write-downs. But the key is going to be how the Irish economy goes over the next couple of years. That's going to dictate how the Irish government whether the Irish government gets out of this mess.
And can the country afford a bailout on this scale?
Well, that's, again, the absolute problem that they have. I mean, when we look at Ireland, people are now looking at it and saying, well, this is like Greece back in March and April, with the way yields are going. But there's one big difference, and that's Greece had a bond maturity in May, which no one thought they could refinance. Ireland, thanks to their debt maturity profile, don't need to come back to the market to the middle of next year. So the one thing they do have is a little bit of time.
Is there now a danger that other banks, like Allied Irish banks, we know that the government is in talks with them, will be targeted by the markets?
From a bondholder's perspective, the key thing is that the Irish Finance Minister has said consistently that senior bondholders will be repaid in full. That has been his message all the way through this crisis. Now, when it comes to subordinated debt, I think the market is expecting to take a hit. They will take a hit, but that's been trading at distress levels for a long time, and indeed an Anglo-Irish sub-debt hasn't traded above 50 since January this year. So the market's expecting pain when it comes to sub-debt. If they can keep paying the senior debt, then I think the market will forgive them.
Nevertheless, the cost of borrowing continues to rise. It was again at near record levels yesterday. Is that likely to continue?
Well, it may well do. The key is when Ireland next have to come back to the market, what's the yield on that day? What yield can they borrow at then? And indeed, can they borrow? And just as long as they can borrow a decent yield then in, say, 6-9 months' time, then it doesn't really matter to them what the yield is today.
OK, Gary Jenkins, Head of Credit Research at Evolution Securities, thanks very much.